Hi, everyone. I'm Jerry Davidsey, CEO of Presilium Private Wealth. Welcome to Financial Planning Fridays, our weekly video series on financial planning, where we work to simplify wealth management decision-making for our clients so they can focus on what is most important to them. In our 26th Financial Planning Fridays episode, I wanted to share some interesting historical data on January market returns. The S&P 500 just had its best January since 2019, with a gain of 6.2% for the month. This is especially interesting because there is a market indicator known as the January Barometer. This barometer says that the stock returns for the entire year are usually similar to what we see in the first month of each year. We analyzed the data for you to see just how accurate this has been in the past and what this may tell us about the future. We looked at the data on the S&P 500 returns going back to 1928. Since then, the S&P 500 has been positive in the month of January about 53% of the time. So basically a coin flip as to whether January will be positive or negative. However, in the years where January was positive, like this year, the market went on to finish the year up 86% of the time. Furthermore, the average annual return for those positive years was more than 16%. Conversely, in years where January was negative, stocks were only positive 57% of the time, with an average return of 5.52%, about 11% less than positive January years. This January was even more special. It was only the 21st time in the last 94 years that the S&P 500 was up more than 4% in the first month of the year. To find the last time that the S&P 500 did not finish positive for the year after a 4% plus January, you have to go all the way back to 1934 when the S&P 500 was down about 1%. Every time since then, the S&P 500 has always finished positive after a 4% plus January start with an average return of 22.9% for the full year. A historical trend is certainly not a guarantee of future results, but it is amazing how often long-term historical trends continue to hold true and can set the tone for the year. In our 2023 Market Outlook video a few weeks ago, we gave 3 reasons why we were so optimistic for the upcoming year. And after a great January, we wanted to add this historical trend as another reason for optimism in this upcoming year. Thank you, and we look forward to talking with you again soon.